Welcome to Local Leverage, your competitive edge in business. As always, today's show is brought to you by Property Radar, the hyperlocal lead generation platform for small local businesses. Today's guest is a commercial real estate mogul managing over $500 million in assets. He's a CPA turned investor and the voice behind one of the top business podcasts. If you're serious about scaling in commercial real estate, this is your playbook. Today, we're breaking down the framework for succeeding in commercial real estate, how to identify market opportunities, and tactics for building and developing your team to scale. Please welcome Ben Reinberg.
Well, Mark, thank you so much for having me on. And I love being on real estate shows because it's really my bailiwick. It's what I know and love and have grown throughout my life and my career. And so really excited to be here. So, Mark, thank you so much for having me today.
Yeah, no, it's a pleasure and honor from our side. I mean, I think we often talk about other areas of real estate, but talking about commercial and having the ability to sit down with a mogul in this space is an honor for us. For today's conversation, I really want to get into some of the tactical details. I want to give the sauce to our team, and so that people can walk away with something to go implement or some thoughts that they can work with right away. So, let's jump right in. I mean, I think one of the things that is intriguing to me is that your business has continued to build and build, and I think you have over 500 million out there today. And in order to do that, in order to sustain that, I've got to imagine that you have a very robust and reliable lead generation flow. And so I'm curious, what does a lead generation engine look like in the commercial space, especially within the asset classes that you serve?
Well, it's a great question. And it's evolved over the years. I mean, especially with technology. When we first started, it was a lot of shoe leather, getting out to the market, canvassing properties, if you remember that term.
Yeah.
For your folks out there that are younger, they probably don't realize we should actually go out to areas, map
Actually,
them,
knock on some doors.
knock on doors. We're saying, okay, who owns these 30, 40, 50 properties? We're going to call them this week. And then we do it again. We go back out and canvas. So it was more of a local and regional business when I first got started over 3 decades ago, Mark. And what's changed is technology started evolving. And with the PDFs and Google Earth and all these different things, we could look at properties. So we started expanding into different states years ago. And it also allowed us to get into different asset classes. And so when we started, we're office and industrial experts. We built millions and millions of square feet of that product, owned it, syndicated it, et cetera. And a lot of it was word of mouth. It was, hey, Alliance can close. Let's send them a deal. It was word of mouth. It was a mushroom effect. We started doing PRs. We'd be in local papers. People said, okay, who is Ben Reinberg? Oh, he's buying. He's in commercial real estate. It was the initial type of branding, and we didn't know it was branding. We just felt like we need to tell the world what we're doing so we can get more deal flow, more leads coming in. And that's how it worked initially. And that started evolving. And then years ago, probably about, I would say 25 to 26 years ago, I started something called a newsletter. And we built up our database. I had 6 figures of people that were following me on the newsletter. And I used to do every month, I'd do a Q&A with Ben. And the CBREs, the Cushman Wakefields, the Jones Lang LaSalle, they would take it in their conference rooms. And they would use it as an education piece. And I would have a call to action and say, hey, if you have a property to sell, please give me a call, or please give someone from my staff a call, so on and so forth. And that's how we started finding opportunities, along with the skills of doing the shoe leather, the canvassing. So we started mixing everything together. And then we started doing email marketing, and that kind of grew. And what happened was we were able to do even more PR, and it kept growing and growing. And so now we have a whole acquisition staff that call brokers and sellers directly, and that's how we create leads. So we get leads directly from brokers because they know we have the opportunity to acquire something. They know they're going to get paid and make money because that's what their objective is. A seller we know how to deal with and help them. And so about 22 to 23 years ago, we got involved in the medical office space, in addition to office, and we do office industrial retail at the time. Then we got into medical office, and we became a leader in medical office. We realized that in the current state of affairs we were in at that time, we realized that we needed a change. We couldn't just buy general office anymore. The internet was becoming prevalent. People didn't need as much office space. You could see even after COVID, as an
Oh
example,
yeah.
that
Yeah.
people were shrinking. People working remotely. Our staff now, we have so many different satellite offices. We have a headquarter office in Chicago, but we don't need as much space in Chicago, we realized. So the world changed in office. So we got involved in medical office and we've been thriving. And then this past year, we opened up a multifamily division. We see a lot of opportunities in multifamily, so we decided to get in. We thought we'd be a great player in that space. And so at the end of the day, Mark, I realized that in order to create leads, it's the same process. It's the marketing, it's providing value, which I do. Now I have something called a blog. My newsletter became a blog, and it's
Right.
got a lot of people. And we put it on the Substack, and it does incredibly well. We have a 40% open rate every week.
Wow. Nice.
And what I do is I add value when we write it. And we talk about more than just commercial real estate, because there's more than just commercial real estate folks that will sell us commercial real estate. And so what ends up happening is it's the marketing has changed. We've used technology. We're starting to use AI to help generate leads. So there's so many different mediums out there, for lack of a better word, to social media. Mark, if you look at 4 years ago, I wasn't on social media. I was
Yeah.
on LinkedIn because Jeff Weiner's from Chicago, and that was a great platform. And it still is a fantastic platform. And so we've used all these different platforms in a culmination to create leads. And all this also brings in investors, high net worth investors and family offices who we raise money from.
I love that message. Ben, I mean, so man, the commercial space has been a bit of a roller coaster, and certain asset classes got hit really hard post COVID, and I know you've even made some pivots into like multifamily. But this concept, like you just talked about being the best at one thing and finding that niche, I think is super critical. What recommendations would you give folks in terms of finding their niche within commercial at this point? And how do you then take that specialization and that focus and translate that into being unique and best?
Well, first of all, it's a fantastic question because it's something I get asked frequently. And if you're getting started in the business, because people are like, well, how do I get started in commercial real estate? Now, I don't recommend, and I'm not saying this because I care if you compete with me or not. I'm just telling you through what I've been through, my personal experience for 3+ decades. Becoming a principal at the age of in your 20s is not for the faint of heart. It's not easy, okay?
Yeah.
It's a lot of work. It's a lot of grinding. It's a lot of uncertainty. When I tell kids that want to get in the business, I say, go into brokerage, okay? I like investment sales brokerage if you're going to work hard and make calls because it shows you the discipline, but the more deals you could look at and you could do, which you could do in brokerage when you're younger, you'll decrease the learning curve you need in the process. Now, I didn't go through that because when you're a principal, you're not doing nearly as many deals as when you're selling as a broker, if you're a good broker. So get on a good team, okay? I just had this conversation with a guy I taught the business who sells all our deals, who's phenomenal. And we talked about this. And we said, well, how would you recommend one of your kids to get in the business? We said, go into investment sales broker. Then if you want to become a principal after a time, you can take the risk because maybe you got enough money in the bank to do it.
Right.
I went the opposite way. I just jumped right in, which you can do. So the other thing is when it comes to picking a niche, what I tell people, and I don't care if the internet is prevalent or not, pick a market that you're going to focus on. Now, I recommend, this is my personal advice, okay? I recommend you start locally or regionally. Why? I'll tell you why. Because it shortens the distance to bring in resources. In your local area, you have relationships. You could say, okay, I need a banker to be able to fund this acquisition. I need a loan. I need a first mortgage, a deed of trust wherever you live. And being local will help you build your resources fast. So you do a couple deals in your area. Like for me, example, we were in Chicago. That's where we started. That's where we started doing deals. And so I look at this, Mark, and I say, well, where's the least path of resistance? Where's the shortest learning curve? It's local. There's no question. And so you start local. You find out in your market where are the opportunities, what properties really resonate with you that you can make money. So, for example, in Chicago, I had a lot of friends in multifamily when I first started. I want to get into industrial and office. It's a big industrial and office market. That's how I got started. It wasn't sexy, but it was a smart move. And so in your area, it might be self-storage, it might be multifamily, it might be mobile home parks, whatever is in your area that is your bailiwick that you feel like, hey, I can get involved and learn. You're going to go on a learning curve, but you got to jump in the water and start swimming, and you got to push forward, and you got to build your resources. And so that's what I would recommend for a
Yeah.
young man or woman getting involved in business. Start in
Mhm.
brokerage if you can. And if you want to become a principal and you can survive for a period of time, then start locally, pick your niche. And then once you start locally, Mark, then you can start exploring and say, okay, well, I have my process down in place. I'm in Chicago. I'm going to go to Columbus, Ohio. Okay. I'm going to go to Indianapolis, like maybe start regional, right?
Yeah.
And then regional becomes, this is exactly how we did it. Then regional becomes, you know what? I'm going to go to Tampa, Florida, Orlando. I'm going to go to Mobile, Alabama. I'm going to go to Charleston, South Carolina. I'm going to go to Charlotte, North Carolina. I'm going to go to Virginia. I'm going to go to Arizona. And it starts matriculating and growing, and you continue with your processes, your due diligence, your underwriting, and your craft becomes perfected. And then you can give your investors a more larger breadth of your product. But
Yeah.
you get rewarded for focus in life. And I said that
Yeah.
earlier, and you will in commercial real estate. So pick an asset class, pick an area, become the best at it, and you will see you'll get rewarded.
What have you learned along the way? I mean, as you look at these different asset classes, as it relates to your approach, how you engage with them, maybe where you engage with them, and your messaging and positioning, how does it change from asset class to asset class? And how do you make sure that you're going into a medical office versus an industrial with the right message that makes you stand out as a unique specialist?
Well, you have to become an expert in the asset class. You have to do your homework. You got to learn. You got to read. You got to do some research. Medical office is very tricky because you have to really understand their businesses and how they operate. You have to understand the reimbursements. You have to understand how much money they invested. You have to understand patient count, where the patient's coming from, not only supply and demand. Now you have to understand the business and all these different commercial real estate classes like industrial and medical office and retail. You got to understand financial statements. I got to look at their performance. How are they doing as a company? What's my default risk? How are they doing at that specific location? Where do they have other locations they can consolidate and compete with? So it becomes more of a macro, and then you start getting into the microeconomics of it. The other thing, too, that comes about is you have to understand real estate fundamentals.
Right.
So now you have to understand the business and the location. You also got to dig in and say, okay, well, what's market rent in the area? What are they paying? What's vacancy rates? How much does it cost? Is there raw land that can compete? They can go build a new facility if their lease is up in 3 years. Okay. You're going to look at if it's a medical office, like do they need to be near the hospital? Is it OBGYN where the guy wants to walk over to it?
Right.
What's my supply and demand? What's my demand generators? How's the business doing? So that's medical
And,
office.
and are you doing that for everybody in the rent roll on a given
Oh
property?
yeah. Oh
Yeah.
yeah. Oh yeah. No, we dig deep. I mean, it's quite the process because we want to understand where our risk is. Our job is to mitigate risk because the key to commercial real estate for everyone out there, it's not about location, location, location. It's about the ability to hold, the ability to hold, and the ability to hold. You have to be able to hold on and ride through different cycles like we're in right now, having enough reserves, flexibility in your lending. And so the ability to hold is critical in commercial real estate. Well, how does that come about? It comes about with great underwriting. It comes about with doing your homework. It comes about, like we talk about, analyzing all your tenants and the real estate market and the submarket you're in. So it's a holistic approach. And that's why it's an experienced person's game. And you get better and better with age in this business. I'm in the prime of my career. Why is that? It's because you make mistakes. You go through, you say, okay, we could have underwritten that a different way. Or markets have changed. Or you realize, hey, and the next deal when we finance this, we need to include this, this, and this. So you're constantly stacking your experiences on one another, and it makes you stronger and powerful. It makes you better for your investors too.
Yeah.
And so you have to go deep. You have to invest in the process and invest in due diligence.
So I love that precision and that you're applying there. How are you applying level of precision in terms of just your targeting of which properties or property owners you're going to go after, even before you have the access to the kind of depth of the rent roll and things like that? Like what do you, is there data available to you? How are you utilizing that, and how do you target?
Well, I mean, we have different software. We spend a tremendous amount of money on software to analyze. We look at areas, we do a lot of reading. We look at areas that are growing. We're going to look at if it's medical office, which is one of our niches for the Alliance Medical Fund, our fund. We'll look at and say, okay, where are we investing? Well, we're going to invest where there's population growth. We have a buy box of certain density, certain amount of
Yeah,
population. How
aging
is it growing?
populations, or
Yep.
yeah,
How's it growing? We're going to look at, do we have annual escalations in the rent? We're going to look at tenant investment. So how we're gonna identify properties is we're gonna have saying, okay, is it red, yellow, or green? Green, we'll move forward. Yellow, we gotta do some more due diligence. If it's red, we're probably not gonna touch it. And so we'll look at and have an understanding. Let's say we're talking to a broker, we're gonna ask questions, and the questions will lead to answers of if it fits our acquisition criteria. So we have specific criteria for the fund, and we adhere to it. And if something is outside the box that doesn't make sense, that's gonna increase risk or cause issues, we just won't buy it. So we'll walk away from a deal if we need to. And that's hard for people because, especially with the acquisition guys, we find that what I call they glom on to the bricks and mortar. They fall in love with the bricks and mortar, but they don't realize where the risk lies and that things can change. So I tell people, never fall in love with the bricks and mortar. Get the facts, know the numbers. Anyone that understands numbers, Mark, will always be able to sit in every conference room meeting. That will always be the case. The person that understands numbers is the most valuable person.
You had mentioned earlier, kind of everything from the shoe leather to working with the local brokers. I assume at this point you're doing probably a hybrid approach, right? You're certainly working with brokers that get listings, but I also assume that you are actively seeking off-market opportunities and cultivating those yourself. Do you have a preference at this point? How does that stack up in your business? Like, what's the mix?
I think it's a two-pronged approach. You just continue to do that. You continue to market towards sellers directly, and you continue to work with brokers as well. And you want to develop relationship with brokers where you're making them money, and you're the easiest choice. You want to be in front of the line. So it's a lot of hustle. It's a lot of follow-up. It's a lot of building rapport and relationships with brokers. And then when you're on with the seller, you have to find out their pain points. Why are they selling? Because every deal in our business, in any business, is you have to have a motivated seller. So we need to find out, Mark, why are they selling? What's the motivation?
Yeah. And so that was going to be my next question is what are some of the key motivators or signals that a commercial property owner, that you can key into and try to identify these off-market opportunities? What are I mean, sometimes they're distress signals, sometimes it might be aging out, but curious, what is it that you're looking for?
You're looking for, if it's medical office, maybe you're looking for a physician group has older doctors, they own the real estate, there's a conflict of interest. It could be they want to expand, so they want to do a sale leaseback and take out the cash and use it to expand or more equipment. It's the really key is finding out where are their challenges and what is their objective. We've seen deals where doctors don't get along. They own the real estate and they say, you know what, we'd rather have someone else manage the real estate because we can't make decisions together and we'll just rent. We've seen that before. Conflict of interest has been a big thing the last handful of years where hospital systems are buying these practices, and 2 of the 10 doctors that own the property don't want to redo the roof when it needs to be redone because they don't want to spend the money. And so they're like, well, why doesn't Alliance take it on? They'll deal with it, and we can still work here for the hospital system at the location and not worry about the conflict of interest.
Yeah. Interesting. When you were talking about kind of, your expansion, starting from Chicago and then going into all these different markets, what's your process for identifying a market or maybe even as an asset class? But just curious, like, how do you make decisions about where to go and what to go into next?
It's a good question. I'm just in tune with the market. I'll give you an example. When we decided to open a multifamily division, I was talking to a lot of my colleagues in multifamily. I was talking to even some of the younger guys, and they were putting on leverage that were bridge or short term. It was coming due. Interest rates were rising. And I started looking at it. I said, there's going to be a lot of opportunities. They're going to be either taking back properties or they're going to be motivated to sell. And this is a good time for us to get involved in the multifamily space. So that was just a natural thing that evolved. I think it evolves, and I know it evolves naturally, Mark, when you're in the business every day and you show up. You see where the opportunities are, and you start figuring it out, and you talk to people and ask people. And you talk to enough brokers, you could say, okay, there's a real opportunity here. I'm gonna explore this asset class.
Interesting. It seems like there's there's been a lot of folks sitting on the sidelines on commercial over the last couple of years. I mean, there's like a bunch of activity in COVID, but then just a lot of compression. But there's also a lot of deals that are maturing and that are going to have to be dealt with. How do you see that as an opportunity pool? What does that represent for you, and how do you suggest people capitalize on that?
Well, I think you want to get close to banks because with trillions of dollars of loans coming due, there's going to be some properties that are taken back in their REO departments. And so
They don't want to take them back, right?
well, they don't want to, so they're going to sell you the note. But if they have to, which they will, it always happens, they'll sell you the property. We bought a property years ago in New Orleans that they took back. And we sold it a few years ago, did very well on it. And it was an interesting deal that we had to deal with. And the deal matured and we sold it, made a profit, and did really well for our investors. But I would say there's going to be a lot of motivated sellers out there with loans coming due that need to sell. And there's going to be a lot of lenders that have to deal with it too. So I would align myself and look for what areas do I want to be in, what asset class I want, and how do I gain access to the opportunities. There's going to be opportunities around all the asset classes. There's no doubt. So it's just a matter of what space do you want to play in.
And do you think the mechanics are more challenging or different now? I mean, in order to make a deal pencil,
Yeah.
and kind of what do you see people doing to make these opportunities reality?
What we're doing is we're paying all cash for deals, and then we're going to put financing on it. And so you might have to do a little bit smaller deals if you're out there listening, because the cost of capital, you look at the loan constants and you see the cost of capital and you say, wait a minute, seller wants a 7 cap, 7.5
Right.
cap. Debt markets are loan constants a 9. So now I got negative leverage. Speaking of leverage, and then you're like, well, how do I make it work? I mean, we did a deal in Arlington, Texas last year. I'll give you an example. And it was a sale leaseback, 12-year sale leaseback. It was a great deal. And it wasn't the capital markets were tough. It was tough to finance. And so what ended up happening is we said, you know what? We'll pay cash, we'll close, we'll get a better price, better yield, and we'll provide certainty. Because sellers just want certainty, especially in this market. If you can't provide financing, how are you going to do it? So we see paying cash, asking for seller financing helps. And so there's different ways. Or you can just do low leverage on a deal, put more cash in and just pay lower yields to your investors and protect their capital. So there's different ways to do it. You can do deals in any market. It's just how creative you're going to be and how bad you want it.
Yeah. Your move into multifamily, I'm curious about that. What was the rationale for that? And obviously, it seemed like an asset class that continued to perform even when things were going a little bit sideways over the last couple of years. What is it about multifamily that's of interest to you? And is there a specific maybe subsegment of multifamily that you're most focused on?
I think we saw that there's certain markets we can invest in and get yield, and that's pretty stable employment base. We're not going to compete with every, Tom, Dick, and Sally out there because it's a very competitive space. And so what we did is, and what I like to do is bring in experts to come work at Alliance. I brought in a young man who wasn't happy at his current location. They weren't doing deals. And I said, why don't you come join us? We have a good pedigree, good track record. We do things different at Alliance. We do a lot of personal development too, where you can design the life you want to live. We do a lot of really cool stuff for employees. And he loved it. And I said, look, you're going to open up this division. You're going to put the business plan together, and I'm going to support you. And that's what he did. And so what I did, and I like to do, is I like to bring in experts to run our divisions. Even though we're medical office, industrial, retail, and those are my expertise, I understand multifamily. and I get it. I know how to capitalize it. But I figured, why not bring someone in who's done a lot of deals and a lot of business, who's already high on the learning curve, and run that division for us. So you want to talk about leverage, that's leveraging into talent. And then he wanted certain technology to bring with him. We leverage into technology. So leverage is more powerful than money. And that's how we do it. We just shorten the learning curve by bringing in someone that's been there and done that. It's investing in smart money.
That's cool. I'm curious about kind of you talked about kind of utilizing, brokers, and how do you set Alliance up for the greatest success, by kind of creating these referral loops, or these strong relationships where maybe you get early opportunities, or at the very least they understand what your buy box is, and can then serve you up the best opportunities. But how have you gone about nurturing those, and how strategic is that?
It's very strategic. I mean, obviously, we get them on our blog. We stay in front of them. We offer value, okay? And for everyone out there, I want to talk about the lessons, because there's a lot of entrepreneurs, I'm sure. And the lessons in entrepreneurship and real estate are very similar. I'm going to give you some tips that you guys can bring home and have for the rest of your life, because this kind of ties into what you need to have these referrals, have business continue, no lulls, and to raise money as well. As you need to know what you stand for and be an example of it. You need to own your behavior and who you are. That's your number one thing, okay? And I'm going to repeat that because I want everyone to really understand it. So it's know what you stand for and be an example of it. Second thing is you're going to build a foundation. It's going to take time, but you're going to build it. And it doesn't matter if you're a broker, principal, architect, engineer, I don't care. You're going to build a foundation. Then you're going to say, I need to build a team. You're going to start building a team around you. Just like at Alliance, we have 200 plus years of leadership team experience. We have a great team. And then what's really important is you're going to execute and deliver on what you say you're going to do. Your words are going to matter. People are going to depend on you and know you're reliable and dependable, okay? And what's that going to do? It's going to go back to your question of getting consistency in referrals and opportunities. So be that person, execute and deliver on what you say you're going to do. Measure often. Don't be afraid to pivot. When we started 23 years ago, we said we got to get out of general office and pivot to medical office. That's a perfect example of what I did and what we did at Alliance. We looked at the market and said, well, people don't really care about IRR. They care about cash flow in this market. This is years ago. Well, we talked to our investors and they said, you know what? Let's find something that has consistent cash flow and conservative with upside. That's what medical office was, we determined at the time. So measure often. Don't be afraid to pivot. Okay, don't worry about what other people think. If you have to pivot, you do. And there's nothing wrong with it. And then lastly, which is I'm a huge proponent of, and I believe in this, and I work on it every day. The learning doesn't stop. Always be learning and always be growing. And I'm going to repeat that. Always be learning, always be growing. People say to me, well, Ben, you're the founder and CEO of Alliance. You guys have been wildly successful. And I said, what's the secret? As a CEO, for you guys out there, if you own a business, I don't care what side of real estate you're in or any industry, you don't need all the answers. You don't have to know it all. What you do is you hire amazing talent that you can leverage into that it can help you. Just like my example of hiring a young man to run our multifamily division. It's the same concept and principle. And so those are the lessons in entrepreneurship and real estate and how they tie together. And if you adhere to those, you'll be very successful.
Ben, one other quick question for you. I mean, as you were talking about kind of your expansion, and you were talking about investing in people and creating your team. Take me through that just briefly. I'm curious, as you think about an emerging business or a growing business, what are your first few hires, and kind of why do you stack them in that order?
Well, if I'm in commercial real estate, okay, my first hire is I'm gonna pick some, like an analyst that could help me run numbers, because I'll do the acquisitions. Let's say you're younger, you're just getting started. You do the acquisitions. You work with someone that can underwrite to leverage your time, because your best time is on the phone dealing with brokers and sellers to find deals. That's how I started. Your next hire is going to be your property manager, who's going to manage your properties internally? Someone has experience, and you're going to invest in software, and you're going to start that way. So you got your analyst, you're the acquisition person, you pick one niche. Then as you start having more success, you say, okay, along with me, we're going to pick another acquisition person. Then while you're doing all that, you're going to have an assistant, maybe an office manager to help with admin stuff. You know, FedExes to whatever have you, faxes at the time, emails, whatever you need. And that's your team. And then as you start growing, you get more acquisitions, you're going to add more people to property management. And as you grow that asset type, you're going to say, okay, I'm ready to expand into a different asset class. And you do the same process over and over. That's how you do it.
Love it. That reconciles real well with kind of how I think about most entrepreneurs, right? And kind of how to stack it, right? Staying in the acquisition seat, it's kind of like what I would consider, founder-led sales and maybe other entrepreneurial efforts. Why do you believe that that's important for you to stay in that seat, or at least to start there before you bring in a second?
Because you got to learn about deals. You got to learn how to deal with risk. You got to learn how to work with investors. You got to be a 7-tool player if you're going to be a principal starting off, which is what I was. I raised the equity. I found the deals when I was younger, and it allowed me to teach it too. I can't teach what I don't know. And so if I'm going to teach someone how to raise equity, or I'm going to teach someone acquisitions, I have to become an expert in it. Well, how do I become an expert, Mark? I'm deep in the water doing it every single day, 7 days a week. And I'm committed. If you look at my show from my podcast, Ben Reinberg, I Own It, the second season of my TV show is called Obsessed. You have to be obsessed to learn and grow. And that's part of it. That's just the truth.
Awesome. I'm going to land the plane here, Ben. This is fantastic. I appreciate you dropping all of this wisdom and experience on everybody. I hope people check out your book and your other assets. What's the one thing that you would tell people to go check out in terms of if they want to follow you or learn more information? Well,
if you want to invest or learn about commercial real estate, go to alliancecgc.com. That's alliancecgc.com. I always tell people, if you invest with us, you'll go on a learning curve about commercial real estate and learn how to invest in commercial real estate, seeing what we do. If you want to learn more about me, you want to get a copy of the book, you can go to benreinberg.com. You can follow me on all the different social media platforms. You can see me speak when I travel around the country. And it gives you a way to sign up for our newsletter, our blog, to learn. We write great content. And it's not just commercial real estate. It's about all different stuff of hard assets and different things we do and what's going on in the economy. It's real value-based, real knowledge. So you could do that. So those are the two best ways to keep in touch.
Fantastic. Ben, thanks for coming and sharing real-world experience and all your wisdom. If you found value in this episode, make sure you subscribe and share this with friends and colleagues that can also get value from this. And thanks for joining us on Local Leverage.
Okay. Well, thank you so much, Mark. And everyone out there, just go out there and do it and believe in yourself.
Fantastic.